This is an Uncover Japan company research report on Teikoku Sen-i, ticker 3302. Teikoku Sen-i supplies the hoses, vehicles, drainage pumps, protective gear, and equipment used by Japan's fire and disaster response services. This video follows the report's evidence on the business, its recovery and earnings, its policy tailwind, valuation, and the risks an investor needs to watch. The snapshot captures the trade-off. At the report's reference price of 3,300 yen, Teikoku Sen-i traded at a forward price-earnings ratio of 22.3 times, while the balance sheet carried a 79.1% equity ratio. Fiscal 2026 earnings per share were estimated at 148.4 yen. The report's scorecard totals 17 out of 20, led by macro fit and growth quality, but it gives value only 3 out of 5 because the shares already reflect a substantial part of the constructive case. The product is easier to understand as a response system than as a textile company. Teikoku Sen-i has grown from linen into Japan's only domestic full-line supplier across hoses, vehicles, equipment, protective clothing, drainage, and security. Its customers include high-credit public sector buyers, particularly fire and disaster response organizations. In that setting, reliability, certification, and a proven field record carry more weight than the lowest initial price. That is the foundation of the franchise, although it also makes the order book dependent on government budgets. The recent financial story is a recovery. Revenue rose from 28 billion yen at the fiscal 2023 trough to 33.6 billion in fiscal 2025. Operating profit recovered from 2.6 billion to 4.1 billion yen as the disaster prevention margin improved. Company guidance for fiscal 2026 points to 36.3 billion yen of revenue and 4.8 billion yen of operating profit. The key point is not just sales growth. The operating result is highly sensitive to execution and margin in the disaster prevention business. Looking forward, the author's estimates are measured rather than heroic. Revenue reaches roughly 40.1 billion yen by fiscal 2028, while operating profit reaches around 5.6 billion. That implies operating margin improving from 9.2% at the fiscal 2023 trough to 14%. The path depends on national resilience projects, product mix, and cost pass-through. It should be read as an analytical scenario, not company guidance and not a promise. The competitive advantage is a combination of breadth and accumulated trust. A customer can source an integrated package of hoses, vehicles, pumps, clothing, and equipment from one established supplier. The qualifications and reliability required for emergency use are not replicated overnight, and a long record with fire services reinforces the position. The counterweight is equally important. Public sector demand can be stable, but it leaves the company exposed to budget timing and procurement cycles. Teikoku Sen-i's balance sheet is unusually strong. The report describes it as effectively debt-free, with an equity ratio around 79%. That provides resilience and includes substantial investment securities. But it also helps explain why return on equity was only 5.4% in fiscal 2025. For shareholders, the same asset base is both a downside cushion and a capital allocation question. Progress in profitability and returns matters as much as the size of the balance sheet. Cash generation supports the balance sheet story. The report puts fiscal 2025 free cash flow at 2.2 billion yen and forecasts it rising to about 4.1 billion by fiscal 2028. Its assumption is that capital expenditure remains within depreciation as the business grows. This is constructive, but it is still forecast dependent. Investors should watch whether working capital, project timing, and margin performance allow cash conversion to track the model. The central macro opportunity is Japan's 20 trillion yen national resilience program over 5 years. Teikoku Sen-i is aligned with the categories that matter in disaster preparation and response, from drainage to protective equipment and specialist vehicles. That alignment is unusually clear, and it underpins the report's high macro fit score. But a large policy envelope is not equivalent to company revenue. Budget execution, tender outcomes, capacity, pricing, and competition still decide the company's actual results. Valuation is where the case becomes more balanced. The forward price-earnings ratio has re-rated to 22.3 times, above the 19.2 times historical average shown in the report. The market is paying more for the national resilience theme and the earnings recovery. That premium can be justified by continued execution, but it limits the margin for error. A good business and a good investment are not always the same thing at every price. The report's 3-year scenarios illustrate the range of possible outcomes, rather than setting price targets. Its author estimated bear case is 1,703 yen, roughly 48% below the reference price. The base case is broadly flat, at 3,311 yen, while the bull case reaches 5,238 yen, about 59% above. The base case is the critical message. At the reference price, the market already appeared to discount much of it. To conclude, Teikoku Sen-i is a differentiated disaster prevention supplier with a credible moat, a recovering profit profile, a strong balance sheet, and direct alignment with Japan's national resilience spending. The constructive case depends on margin recovery, project execution, and policy spending translating into earnings and cash flow. The constraints are a premium valuation, low return on equity, public budget dependence, and the possibility that expectations are already in the share price. Watch disaster prevention margin, guidance revisions, cash conversion, capital returns, and the pace of resilience orders. This is analysis for education, not investment advice. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.